Morning, everybody. Welcome to the show. Smash the like button and let's get started. All right, guys. Welcome in, welcome in. Futures are up. Plunger protection team is in, pumping everything. Let's see what's over here. Facebook whistleblower is testifying. Apple stock reaches new highs. Powell is hawkish. Verizon 52-week low. Airline stocks that can withstand Omicron. Hotels down. I don't know. All right, let's see what we have here. Let's refresh real quick. Smash the like button. Everything's up 1%. Yep, Yahoo News. Refinances on mortgages have plunged 15% during the last week, but now could reverse. So it's very interesting. Mortgage rates rose decisively again for most of the week, causing a massive drop in mortgage demand. But on Friday, everything could change with the news of the COVID Omicron variant. So rates, on average, have risen 39 basis points since a year ago. So to be honest with you, I don't think that's that bad, 39 basis points. 3.31% is the national average right now for a 30-year fixed loan with 20% down. The increase in rates caused application refinances of homes loans to drop 15% for the week. Seasonally adjusted refinance demand was 41% lower than the same time a week ago. Mortgage applications purchased for homes jumped 5%, but were 8% lower than a year ago. So this is interesting. Pending home sales in October, which are measured by signed contracts, jumped an unusually high 7.5% compared with September. The average loan amount increased also. So what does that tell you? Home prices are higher, but people in the higher echelon of buying are buying more homes. So the home market is not dead. We can bring it back, revive it, baby. By the way, I have to leave at 9:25 today. We are doing an interview with Kenneth Marshall. He wrote the book, Good Stocks Cheap. And by the way, guys, if you are interested in kind of understanding more about balance sheets and financial statements, income statement, cash flow, etc., go and buy this book. I have not seen a book. Everyone has been, I wish I had read this book a lot sooner, because I would have had an answer for people. A lot of people have asked me, where do I go to learn more about balance sheets? And I say, watch our videos. Now, obviously, watch our videos. But if you really want to understand a little bit more, Kenneth wrote this book called Good Stocks Cheap, and it just beautifully lays out exactly what you need to look for in a financial statement. And not only that, how it correlates, and he puts case studies in there, and he puts examples, and he just did a really, really great job. So go and buy that book. I think it's cheap, and if it's not, it's worth it. So, all right, oil. This is a funny story. Oil prices have tanked so hard that traders are assuming that planes won't fly for 3 months, says Goldman Sachs oil strategist. I had to read this article like 3 times, and I still didn't really understand it, but I think it's kind of funny. It's on Market Watch too. Oil prices have come down way too fast on the Omicron variant concern, says Goldman Sachs strategist Damian Corvalin. I've heard of him. I am being serious. The lack of discretionary buying activity in the face of the uncertain of the new COVID variant has left prices in a free fall, and pricing is of dire demand as we look forward. We estimate, based on our pricing model, that the market now has priced in a mammoth C.7 million barrels per day negative demand hit over the next 3 months, with no offsetting of the OPEC response, pointed out Corvalin. So here's what he said. He says he sees these 3 extreme outcomes. 1, not a single plane flying around the world for 3 months. Okay. 2, half as intense as the global lockdown in 2020. Or 3, a world even worse off than before vaccinations, a combination of global jet demand falling to last winter's level, which was less than 1 million barrels per day, twice as large a hit to the EU demand as the Alpha variant last winter, and twice as large to the Chinese demand of the Delta variant this summer. I don't know, but this is like doomsday stuff that we're reading about. Shares of major oil, BP and Exxon, have dropped 9.8 and 7.2 respectively in the last 5 sessions. So guys, pay attention to oil. I'm telling you, we talked about it last time that this oil stuff came around. I told you about it. We caught a lot of it. And that's just the way to do things. So tons of people in the bid and ask caught it. I loved it. Day trading perspective, swing trading perspective, long perspective. So oil's gonna be moving around again. Why don't we just take a look at oil real quick? I can't remember what the oil ETF is, but I'm just gonna look at BP because it's gonna roll with the rest of the market. Let's see. So we had this big run up on BP, and this is the now when this did happen, I urged you guys, when you were doing this, do this from a swing trading perspective or a day trading perspective. You could have done it. Absolutely, you could have done it. But there was that volatility because this was news driving this thing up. And as soon as we got up here, we knew it was going to come back down. So because right when the stochastic rolled over, that's your exit point. So very easy to do. Now you're just stuck in the middle of a bunch of moving averages. So we'll see. The Fed. You know what? We should start with old Jerry Powell. Fed Chairman Jerome Powell retires the word transitory. Okay, here we go. So, and there's somebody in this article, I can't remember who it was. She was insulting the reader. So she was insulting me. The nation's economic steward said it will back off the word transitory to describe the fast-paced increase of inflation. This is what Jerome Powell said. We tend to use the word transitory to mean that it won't leave a permanent mark in the form of higher inflation. Why didn't you just say that? Why didn't you just say that when you said the word? I think it's probably a good time to retire that word and try to explain more clearly what you mean. Yeah, it's probably a good idea after 7 months of chaos and cluster F. Probably a good time. Powell acknowledged that the risk of higher inflation has increased, certainly, but reiterated that the baseline expectation to the fall is going to fall closer to the central bank's target of 2% over the course of 2022. Here we go. Mary Daly, Fed president in San Francisco. She said, the first principle of effective communication is if people aren't getting it, don't speak more loudly and more emphatically. That's exactly what you were doing for a very, very long time, is just shoving this down our throat and saying that we don't understand, we don't understand. These people, man. Fed Bostic, he's the Atlanta president. He said that he remains open to faster taper and 1 or 2 rate hikes in 2022. That's not popular. Atlanta Fed President Raphael Bostic said on Friday that he is hopeful that the momentum of the U.S. economy. So this is like contradicting yourself. Will carry itself through the next wave of the coronavirus pandemic, and he said it remains to the accelerate. Listen, if this coronavirus becomes a thing again, he's basing this off of jobs. He's basically citing stronger jobs growth. So if there's a coronavirus, people are going to leave their jobs again, or people are going to start laying off workers again. We already saw the playbook. It's going to happen again if that indeed does happen. So I don't understand how you're going to be hopeful that the momentum of the economy is going to carry it through the next wave. Sir, the jobs are the backbone of the economy, and if a COVID comes again, we're going to be losing jobs. So I don't understand how your momentum is going to carry you through. You're going to just completely halt momentum. It could be reasonable, Bostic said, for the Fed to potentially conclude its asset purchases by the end of the first quarter of next year, or the early second quarter if it continues at the same trajectory. These people talk out of both sides of their mouth nonstop. Bostic said on Friday that he has not ruled out any possible actions and said it is certainly possible for the Fed to raise rates at least twice next year to temper inflation, which is running rampant. Okie doke. Apple is setting new highs. This is one of the dumbest stories I've ever read. Why Apple is it's one of the dumbest stories because of the excuse that they give why Apple just keeps going higher. Why Apple is the only tech stock that went up on Tuesday. Apple closed up 3.1% on Tuesday as stocks tumbled. Okay, sounds good. I don't disagree with that, but I just disagree with this meaning. Okay, so other large cap stocks like Google, let's focus on Google and Facebook and Microsoft. They closed down. Now, investors turn to Apple because of the prodigious ignore the word, cash flow, allowing it to endure any slowdowns in an economy and take advantage of falling prices. So if that's going to be your excuse, then why did it fall apart last in 2020? Number one. Number two, Google, Facebook, and Microsoft print cash. Why were those not okay? Why were those? I mean, where's the safe haven there? There's a flight to companies that will weather the storm and not go bankrupt and have financial distress. These people are just something else. These people are really something else. I sometimes I just get so aggravated in the morning reading it from these people because it's not. People like me and you will read this and will get it, but they like the people that don't understand this, the suckers. It's their own problem. But all right, whatever. China's closed for business. Just kidding. Let's go. We'll see what happens in the next story. China to close a loophole for tech firms of IPO firms. Okay, China's going to ban companies from going public on foreign markets through variable interest entities. That's the VIEs. The ban is intended to address security concerns. This is from people asking not to be identified. Okay. If unclear, wait a second. Oh, it's still FB. Guys, when does Facebook turn into Meta? I gotta know. I keep giving everybody fake news. When's China closed? Okay. It's unclear if it would mean a revamp of shareholders or more drastically a delisting of most sensitive firms, moves that could revive a fear of decoupling between U.S. and China in areas like technology. Details of the proposed rules are still being discussed. The China Security Regulatory Commission did not immediately respond. Okay, let's go to the next story. China's open for business. China denies the Bloomberg. China has come out, and they said they deny the Bloomberg report of closing the loophole used by Alibaba, Tencent, and foreign IPO holdings. Like any story leak, Beijing has come out and denied the report. Chinese securities regulation that they are banning these VIEs. So, fear not, people. Fear not. There's no banning yet. Follow us on Instagram at TraderMo_EM, at Paul Gabriel, at Seth Kirchanen. There you go. Follow us. Okay, let's go to here. What's the market doing? Up 350, up 59. Okay. Pretty much holding the same. Guys, look at these curves. The 10-year is really coming down. The 3-month is really coming up. Let's look at a little bit. Let's look at the 5. So the 5-year and the 10-year are getting relatively close. The 30-year and the 10-year are getting relatively close. I have a feeling if things continue on the trajectory that they're going on, we're going to be talking about yield curve inversion sooner than later. CrowdStrike, Snowflake, Splunk report today after the bell. Let's see what's tomorrow. DocuSign, Express, Kroger, Ulta, Marvel, Dollar General, Smith & Wesson, Signet Jewelers, Ollie's Bargain Barn, Duluth Trading Company, Zoomies. I know a lot of you are in that. Joann Fabric, GMS. I don't know what that is. Big Lots reports on Friday, and Hibbett Sports. Okay. If you want to join our software, you get 8. If you just join the software, and by the way, here's the interview for the second part with William Green. Great interview. But this is the Everything Money website. You get stock tickers, news. You get 8 pillars, stocks, retirement calculator, stock analyzer tool, 8 pillars portfolio. Click join EM, run over here. And if you want to, you can get in right now because these prices haven't updated, but they're going to update as soon as I text Tim. $30, it's $29. This is going to go to $30 today. That gets you everything that I just talked about, plus the Discord community of 7,000 plus people. If you want to join the Bid and Ask Nation, $79 a month. This is going to $80 a month. You get access to everything that I just said, plus access to me, Employed Trader Series, Trading 101 Series, my monthly seminars. By the way, I'm doing one this Saturday at 9:30 in the morning Eastern time, so come with your questions, and we'll have a good time. $500 a month if you want to do Paul's Super Shorts. If you want to do a one-on-one trading session with me, $750 a month gets you into that. It's a recorded session. We could talk about whatever you want, from trading to options to your portfolio to whatever you want to talk about. But that's that. And if you're a new trader, come in and learn it the right way. And if you're an older trader, come in and work out the kinks, and we'll go from there. And if you want to do a real estate deal with Paul, $10,000 for 4 hours of his time gets you that. Okay, let's look at BBY because somebody just said it. What is going on? Well, let's see. So BBY. So why don't we pull up? So they had a really nice run up. Oh my God. Okay, so this is a. You know how we always talk about W formations going up, and that's exactly what you saw going up. And then we talk about a flagpole pattern. This is a flagpole going down. Now, flagpoles going down don't work exactly the same because it's much easier to go down than it is to go up. But this thing is going to hit off this resistance point and turn back up. And you can already see on the daily chart that this thing is bottomed out and it's already starting to do its little bit of reversal. So keep a watch on this one. You can certainly go long on this. It's not going to happen as quickly as they come down. But here, look at this over here. The same thing happened over here. Good earnings, green. Can you see that? Yep, good earnings. Flagpole down, ran right back up with W. So you will, this one will rebound. This is a good company, and eventually things will come to fruition. Let's see. CRM, what that? CRM. Salesforce, didn't Salesforce report yesterday? If I remember correctly, yep, it sure did. Man, memory of an elephant. All right. What did they do yesterday? So they were bouncing all over the place yesterday. They reported last night. Okay, so they reported great earnings. Let's see what they did. They came in on earnings per share up 37.68%. They surprised revenue by just over a percentage, and they are down pre-market, down $12 a share. So there's earnings for you, people. You're going to gap down this morning, and you're going to have a gap to fill. So look for this thing to move back up. I would follow it over here. This downtrend is going to continue. Do not short this until today settles down. Can I do VVV? Sure. Valvoline. All right. So you are holding some kind of support level here. 1 and 2. So you're holding a support level here. Now, it helps that you're at the 50-day moving average. It doesn't help that you have this gap down here. So let's see where this thing goes. If this thing starts moving down and gets below this 50-day moving average, you can absolutely short this thing to the 100-day moving average. I do not see a problem with that. So keep this thing on a watch. Okay. Let's see here. I think Mo is the best at telling you how you make money after a trade has occurred. Really amazing. You could have made money easily here by buying at 19 and selling at 20. Monday morning quarterback? Sure, I could be Monday morning quarterback, but if you want to see my portfolio of my millions and 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 millions of dollars that I've made, I can email it to you. So send me an email, mo@everythingmoney.com, and I will send you a spreadsheet of it. Actually, I won't because you're a dick, but I'm just joking. But if you want to argue with that, go ahead, and you're welcome to hit the dislike button and leave. Bye-bye. So, Palantir, you're holding a support level right here, support level right here, support level right here, and you have this big support level that occurred in May. So, that being with you're at the bottom of this stochastic right here, I don't think I would short it. I do not think I would short it. You're running into too much support. I would wait for this thing to bounce and just start making a move towards the top side. But the thing that's really going to drive this thing is volume. You need volume. That's exactly what you need is volume. Next. Should we do Baba? All right, let's do the Baba. All right, so first of all, let's zoom out. Let's zoom out really far and see the support level. All right. So we're sitting at support right now. Certainly sitting at support right now. Okay. This is your next support level. Actually, I'm going to pull out the tweezers and just show this will be much easier. So 119.15 is another support level. Then 109.80, so we'll call it 110. 100, 95, 86, 75, 59, 0. That's what I think. Okay. Baba has so much support in there. All right, Walmart. Yeah, let's do Walmart. So with Walmart, see, Walmart is doing what Nike was doing. It was trying to. So this is something that you really want to swing trade. It's getting to those all-time highs, and then it can't. It just falls apart. That's the problem with what Walmart is doing. That's not a bad thing. I'm just saying it can't break those all-time highs. So what I would do is let this thing hopefully bounce off of this 200-day moving average. And you can see that it dropped down here, closed at 140.63, and then it's going to open this morning right at the 100-day moving average. Actually, literally right at the 100-day moving average. So let's see, 200. Let's see if you can get this thing to bounce and start making a move to the top side. But based on where the stochastic is pointing down, I think it's going to just consolidate in here and then make a move. So keep watching Walmart. I would look at it more from a long-term short-term perspective, but it's definitely something to get going on. Okay, let's see. How about HPQ sold my value position? Let's see. So HPQ had that really big run. Let's see what's going to happen. Oh, okay, interesting. So I'm going to pull up a line chart here. We definitely have a flag pull, but the thing is this thing flag pulled up and it created these W formations. So, you're rolling over here. Good idea to take profits on it. No need to exit yet, but good idea to take profits on it. Let's see here. This, I would take profits even from a daily chart. Let's see what happens. I would not be surprised if this thing dropped back down to this 33 level somewhere in here. But with these W's that it's creating good ones, I wouldn't be surprised if it stayed there either. That's the thing. Now, for a short amount of time, I certainly don't think that this thing can stay there forever. But let's see. What would happen to U.S. holders if they delist the Chinese stock? So there's a negotiation would have to go on there. I believe that they would be able to buy your stock on a different exchange for less than is on the U.S. exchange. But to be honest with you, I don't know. Go ahead and you got to research that one. I'm not sure, to be honest. The only stock that I've ever been a part of during delisting was Luckin Coffee, and that's the only one I've ever been in the market for, paid attention to. That was in 2018, I believe it was. Maybe it was 19, but that was fraud. So I am not. it's different than what's happening with Alibaba and the rest. So take a look at those. Okay. What do you guys want to look at? Oh, let's do Facebook. I would really like to get in on Facebook. I would like this thing to turn up and start moving, but it looks like it's about to do a reversal. That's a good thing for my put positions on Facebook. Now, if you wanted to wait until this red line crosses below, you can go ahead and short this to about 310. I would do it from a daily perspective. I would do it from over here. Just make sure you're getting enough selling volume coming in there. Just that's what you need. You need selling volume. Okay. Can you look at DWAC? Guys, this DWAC thing is, I don't have any, yeah, this is all I got. So if I'm you, just go over to a 15-minute chart and play it using the 15-minute candles. MasterCard, how about Visa and MasterCard, which is sitting in everyone's wallet? Let's see. I'm actually surprised of where MasterCard is sitting today. I thought my neighbor got a new car. So you're sitting at a very strong support level. Well, I wouldn't say very strong. You just have a couple of days here. So there's a possibility that it can move down a little bit further. So you're going to open up here. If today opens up here at this 321 level and starts to make a move, you will start to get a swing on the daily chart, and that's where we can go ahead and make some money on this. Why don't we look at V? Same thing, exactly the same thing. You're at this little support level, and you're opening the day up a little bit higher. If you can get trends to change today, then you can start going along on them. Luckin got delisted in 2020. Interesting. maybe it was. Yeah, you're right. Okay, thanks. Foot Locker. Foot Locker. When is a good time to buy Best Buy? Let's go and look. Foot Locker. Yeah, Foot Locker is holding support too. This is almost the same thing. If you need to get some momentum going to the top side, get some buying volume coming in, make this trend change. I would only go long on this thing right now, unless you want to go short from if you want to go short from over here. If you get an engulfing candlestick today, you can. You could have added yesterday. That was a nice add, nice engulfing candlestick. But if you get the same thing today, do it. BBY, we looked at this already, but I mean, if you want to short BBY, you can. Just please use stops. Please use stops because you're sitting support. So be careful. You could have added yesterday, but not really. The day before you could have added, but even then I would have been concerned that you're hung up on these moving averages. So if you get an engulfing candlestick today, you can certainly add to it. But just make sure you're taking profits going into these support levels. And make sure you are using stops. Okay. Foot Locker is up 4% pre-market. All right, keep watching it. Let's see. EA. Let's see what EA is. Oh, damn, I got to go. All right, this is going to be the last stock, and then I got to go. Time flies when you're having fun. Okay, EA holding support. Where are we right now? So this thing is going to open up just a little bit higher. You know what? With this volume that's invariable, it's all over the place. I would just wait until you get something consistent. This short over here is kind of over on the daily chart. You move down very nicely, but you're really bottoming out here. So can it keep going lower? Yes. I don't think you're going to get a confident short like this, where you just keep getting engulfing candlesticks over and over. So, all right, guys, I'm going to get out of here. I got an interview to do with Kenneth Marshall. I can't wait for you guys to see it. I can't wait to talk to him. That's it. I'll see you guys back here, 23 and a half hours, same time, same place. Peace. Oh, by the way, I almost forgot to ring the bell today. Bye.